Jim, we have the Dow, up triple digits, gold
Right.
down, banks up.
Right.
So can we say this rally's for real?
Yeah, look, I don't think any rally is for real. I think all rallies are predicated upon a really horrendous situation from Europe receding from the headlines for 24 to 48 hours and then re-emerging. You had a court decision that says that the German possibility of doing a bailout is legal. But why do I think that they'll do a bailout? I mean, why don't they just help out their own banks? What I'm trying to do is deal with the notion that I've been fighting the whole way, that macro European concerns can really trump micro. Our own earnings and banks have been a big problem to that scenario. And what I've decided is that forget about it. These are trading rallies, and you can buy high-yielding stocks because the 10-year it yields less than 2%, so it's good competition. But the big rallies up are always met with rumors, and the rumors have great credibility because Greece is falling apart. Italy is falling apart. I mean, literally, they really are. And the Germans are being asked to save everybody, and that's never been the historic role of Germany. So
then so you mentioned trading it. So then what would you be selling then on this kind of rally?
Well, you have to, well, first I want to make a point. You shouldn't be selling anything.
Okay.
Because you should be owning the right stocks by now. So I could sit here and tell you you should be selling, and then people will be ending up selling Kimberly-Clark at 68 and hopefully buying it back at 65. They'll sell McDonald's at 89, try to get it back at 85. It's just not worth it. But in terms of buying, no. I mean, there are some times in your career where you have to say, okay, Alex, there's nothing to buy and nothing to sell right now, other than if you want to round down on a position that you might have bought at a higher price, because there's such negativity, and that means there's a bit of a floor. I had an excellent technician's work on last night by a fellow by the name of Ponce, who writes for Real Money. He's really fabulous. And he sees a short-term bottom, and that's terrific. But then I talked with John Roque yesterday from WJB, and longer term, it's disastrous. So, you have this situation where it could bounce, 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 bounce. And is Roque going to be right? I don't think so, because I don't see disaster. I think that Europe is very bad, though. And, we're whistling past the graveyard. And every time the market rallies, I am criticized for that view. Every time it goes up 200 to 300 points, people say, Jim, you're too negative. And then when it goes down, I'm a buyer. So down hard. It's got to go down hard. Not down 300 after it's being up nicely, you're down 500, but some real dislocation to levels that I think can hold. The battleground of 10,000 is terrific. I think 10,000 holds. The S&P levels, I don't think it goes down to 1,100. But, I'm neither bull nor bear, and trying to categorize me as someone who missed a 300-point rally. I mean, you know what? I'm going to miss a lot of 300-point rallies because we could have very easily had something come out in one of these countries last night that it just disables everything.
And I've heard from a lot of traders that it's a tactical market. It's really not for the investor taking advantage of those dips either. It's too scary.
Look, we'll buy a Chevron when it goes to almost 4% yield, and we'll buy Unilever when it gets hit in an ATT because it's about yield.
Right. It's
about yield, and yield means price.
And real quick, we talked a lot about Europe, but what kind of catalyst are we looking at home? Do we have to wait for the Fed meeting, President Obama's job speech to mean anything?
I don't care. I don't care anymore. It's been a big mistake to care, and Obama may say something positive, and maybe you get a quick surge in something, but I've given up. I've given up on saying I care, because what happens is the upside's limited and the downside is not as limited because of Europe. And as long as we have this ridiculous linkage that I don't agree with the S&P futures and the markets down there, we go down. Alex, you know what? I could sit here and tell you I know more about individual companies than almost anyone in the world. And I got to tell you, I have never felt that knowledge has played less of a role in making money. And if I feel that way, then these other people who I regard as dilettantes about individual stocks really may want to catch a 3-point move, but we have to be realistic. Europe is driving it, okay? And if you try to say that we're driving it, it's just empirically wrong, as much as I wish that weren't the case.
All right, thanks, Jim. And for more of those companies that Jim has been doing all that work on, you can go to cramerspicks.com.